Hi friends, it's Adam Hebner. I'm the CEO of Modern Mortgage, and following up with you today just with some basic information about what's going on in the interest rate markets and how that applies to your particular mortgage and opportunities that are around you. You guys might remember from a Modern Minute I did a while back talking about the coming G fee. It's a fee that the government agencies, Fannie Mae and Freddie Mac, are adding as a result of decree by FHFA. Well, that was originally supposed to come in July, August, and luckily there was so much outcry. Our industry did a good job letting you guys know, and all of us together let FHFA and Mark Calabria know that now is not a great time for the government to be adding taxation to mortgages by adding a 50% fee, which it really doesn't do anything except for give them money. It's just a solvency question, gives FHFA and the GSEs a little bit more cash, and they end up giving that in turn back to Congress. So it's essentially, not even essentially, it's directly a tax. Well, the good news was that we all together, you and us together, did a good job of stalling that FHFA fee out. And the fee it entered pricing, but only for a very short period of time, and ultimately didn't end up affecting the flow of business. Now, we know that that fee is coming back, and so it is coming shortly, and most investors are beginning to price it in for loans that they'll be delivering in December. And so what that means is many of our investors are already starting to tell us it's time to price it in. We're not pricing it in. We're holding back. We're not going to be passing this tax for as long as we possibly can. And so honestly, we're keeping a little window open. The door remains open, but it's kind of the last best chance to take advantage of interest rates where they're at. And so guys, there's lots of moving parts that affect an interest rate, but we're locking them, taking cash out for those kind of loans that fit everything, tick all the boxes. I mean, these are high twos for cash out mortgages. Unbelievable interest rates, you know, we talked about theoretically seeing in the industry, but I'm still frankly, despite that theoretical understanding, I'm still shocked to see them here. So now you got to know, if you're waiting for interest rates to fall at a later time, there is much more against you than for you. These rates are likely to stay flat or rise, and I would vote rise. And that's because the government, again, is adding this 50%, 50 basis point G fee, which will be entering your pricing very, very soon. Inevitably, we can only hold it back for so long. We'll kind of stick and move and jive and dodge as much as we can. But as soon as the market closes all those loopholes, we are going to have to pass that price. So grab it as soon as you can. Now's the time. You got to get locked in. Even if you don't think you can close because you've got questions or concerns, lock it now, and then we can work those things out as we go, try to help you find a solution. So take advantage of that now. It's a big deal. Guys, we're going to be sharing more with you about how deflation, the big series I've done for you on deflation, continues to affect interest rates. And remember, the ultimate effect on government interest rates and deflation is that rates go down, but the effect on commercial rates, mortgages, credit cards, auto loans, all the things you deal with, those tend to go up. And that's because banking institutions have to make up for lower demand and higher fees at the banks. So I have a lot more I want to explain to you in the coming weeks. We're going to talk about that stuff. But in the meantime, if you've got questions for us, things you'd like to understand better, you guys are so great about reaching out and letting us know how you want the Modern Minute to inform and instruct and help delve into this stuff in greater detail. That's what we want to do. So let us know how we can be serving you in that. And in the meantime, if there's anyone in your family who has not refinanced yet, guys, it's time. Last best shot to do it. Hope you have a great weekend. We'll talk to you soon. And thank you guys for being part of our community. Take care. Bye-bye.